Welcome to our webinar. Thanks for joining us today. Needless to say, we're going through some tough and volatile period, not only in equity markets, but in crypto markets as well. Many of you know the recent events of Terra coin proves crypto market is riddled with many potholes, and navigating through them is no easy feat. The recent slide Bitcoin and even crypto-related giants like Coinbase is another proof that even the biggest coins and companies are not immune to big downward movements. Investing in crypto is as volatile as any asset class, and it really is no longer a hedge against equity markets. There's always someone smarter than you investing one step ahead of you. Well, guess what, guys? The guests that we have today, there are very few, if any, smarter than this guy. And this is why I'm quite excited about this webinar. Our speaker, Eric Weiss, is a founder and CIO of Blockchain Investment Group. Blockchain Investment Group is a crypto fund of funds that identifies, evaluates, and manages investments in crypto and blockchain-focused hedge funds. I don't want to steal any thunder, but the performance speaks for themselves, as you will see shortly. Outside of this fund, there is really no institutional grade fund of fund in crypto space. And even if there were, it's hard to believe they would be doing any better or any more professionally than my friend Eric at this fund. We're quite honored to have him today. As a way of background, Eric is a founding principal of Stripe Group. Eric was a former director of investments at Internet Capital Group and GE Capital. Before that, he was a bond trader at Morgan Stanley. He purchased his very first Bitcoin in 2013. Sorry to say he did sell out quite a bit. Little too early, little too short. Otherwise, we probably wouldn't be doing this webinar. Eric also has an MBA from Columbia Business School. As I said, I'm very proud to say Eric is a good friend of mine and the firm. The moderator for our webinar today is our very own Sean Farrell. You guys know Sean heads up our digital asset strategy. But before we begin, we will have an intro from my partner, co-founder, head of research and thought leader in crypto space, speaking about the current state of affairs for crypto and Bitcoin. There will be a Q&A at the end of the presentation. You can ask questions using a Q&A button at the bottom of your screen. If you have further questions regards to investing in Blockchain Investment Group, feel free to contact us or Eric directly. As usual, there will be a replay information sent out. And on behalf of Tom and my colleagues, we're grateful for your support and business. Feel free to email us or your sales rep with any suggestions and thoughts. I will now turn the mic over to my partner, Tom. Thank you very much.
Good afternoon, everybody. And I think that this webinar is happening in crypto at exactly the right time. You know, crypto's had a pretty huge correction. I would say from if you own Bitcoin, you're down from the highs, but you're still done really well compared to the last couple of years. But it's the non-Bitcoins, the everything else that's fallen a lot more. And it's really at this time that I think most people are asking the wrong questions because I think in people's heads, they're saying, well, crypto's proven to be, a scam because it's down, but they're forgetting that you take any measurement period, including 3-year rolling, crypto and Bitcoin is still the best performing asset class. And even compared to the NASDAQ since 2009, it's almost a 100 times outperformance, not only just in the last 12 years, the last 8 years, 6 years. So it's been a superior diversification tool. But I think the second question people are asking is they're like, well, if crypto's fallen, it's a bad time to buy it. And that's also exactly the wrong question, because if you look at all the great projects that ascended today, they all were started during after the crypto correction. They weren't started in 2017 at the top of Bitcoin. They started after there was a correction and a shakeout, and cost of money rose, so only the good projects got funded. So I think today is exactly the right time for anyone who's not allocated to crypto to get pretty serious. But I think the mistake one can make is to say, well, I'll just do a little spray and pray and buy a bunch of stuff here at the bottom. That's not how you're going to generate returns. You really need to find someone who can actually shepherd that capital properly. And as they will cover in this presentation, Eric's done a tremendous job, not only outperforming Bitcoin, but really $10,000 invested in 2018 has returned nearly 12 times your money. Just think about that. That's 4 years, 12 times your investment. And as John alluded to, Eric's not new to private investments. I mean, when you do private investments and crypto is not that liquid, you want to find someone who's actually been through many cycles. And Eric was at Internet Capital Group, at GE Capital. He bought Bitcoin basically as an OG. And he today has some of the best folks in his sphere, including being an advisor to Michael Saylor. So with that, I'm going to turn it over to Sean to kind of lead this session.
Thanks, Tom. I'm going to be very brief here. I just want to share this presentation real quick and highlight a couple of key slides to bring home a point raised by Tom. I hope everyone can see this. Let's assume you can. So Tom alluded to, there is a private element to investing in the crypto ecosystem right now. And all of the projects that garnered a lot of attention, those most recent bull market run, they came into the public sphere in 2021. But the first capital deployed into these projects, that happened during the last crypto winter, mid 2018 into 2019. And you can see here on this slide, if you look at the performance of the most common, the tokens that have most of the VC and crypto hedge fund exposure. Obviously, Terra is on here. This was pre-Terra UST collapse. But you also have Solana, Avalanche, Near, Oasis, Polkadot. These all fall within the realm of Ethereum competitors and are head and shoulders above Bitcoin's 60% return, which by and large, when compared to any equity class or most asset classes in general, is still incredible. But for the better part of the last 18 months, we've had a lot of client conversations about how to get exposure to these types of returns, the 20x, 50x returns. And this is how, by engaging with managers who are able to navigate the industry, have a strong foothold and understanding of who are the major players in the industry, who is deploying capital where. That is exactly where Eric Weiss comes in, and he is an expert in the area, and I cannot wait for him to tell you more about it. So with that, I'm going to turn it over to Eric and bring him in to give you guys a little bit more of an overview. Eric.
Thanks, Sean. Tom and John, thank you guys very much for the very warm welcome and kind words. And thanks to all of you who took a couple minutes out of your day to tune in and talk about crypto a little bit. So maybe it's helpful if I just start with a little bit of background. I started my career as a U.S. government bond trader, trading the short end of the curve. And then after that, went to Columbia Business School, got into venture capital and private equity first at GE Capital. And I was investing in internet-related businesses. It was kind of internet bubble time. And we were looking for companies that were using the internet in clever ways that were really adding value to the business. And I did that for a couple of different firms. I was at Internet Capital Group after GE Capital, where we had made an investment in Internet Capital Group, and then helped start a firm in New York called Stripes Group. And it was towards the end of that I went to a Bitcoin conference in Miami. And this was the first time that I'd ever seen the internet being used to transmit value safely and securely. And this was a big kind of light bulb moment. Prior to that, the internet was really good for transmitting information in a way that wasn't particularly secure. E-commerce was really scary. Everybody was afraid to even put their credit card into a website, and still are with good reason today. But Bitcoin was not only a way to transmit value safely and securely, Party A didn't even have to know who Party B was in order for that to be a safe transaction. And this was really kind of mind-blowing to me. So I thought, great, I've got to do something in this space. And I, racked my brain, what kind of business could I come up with to start here? And could I start a directory of companies that take Bitcoin? It wouldn't have been a good business in 2013. It still wouldn't be a good business today. So I just came to the conclusion that, well, if this is going to work out, there's a limited supply of Bitcoin. The price will have to go up. So I bought some Bitcoin. And as John alluded to earlier, I sold all of that Bitcoin way too soon. And the truth of the matter is, I think on a risk-adjusted basis, it is a much better value proposition today than it was then. But anyway, I stayed close to the space and paid attention to the developments that were happening. I was interested when Ethereum came out, other smart chain related things. And I just thought, there's something here. I had some friends in the space, and I was doing some investing on my own. And in the 2016 timeframe, I was having a lot of fun. It was a rising tide, was making money and feeling pretty smart. And then I said, well, maybe I'll start a crypto hedge fund. And I figured I should check the competitive landscape. Being a venture capital private equity guy, I always got to see what the competitive landscape is. And I was blown away to see that there were over 400 crypto hedge funds at the time. And I thought, well, let's see if I have any edge over some of the other players in this space. And what I found was some of the folks in the space had tremendous edge. And not only did I think I didn't have any edge over them, but I would happily pay them their 2 and 20 for their edge. So I approached a couple funds, went to the first one and said, hey, I'd like to invest. And they said, sure, we'd love to have you. And it was a very specific strategy and also a very high minimum investment. And I thought, well, that's not going to work. So I found another fund, went to them. Same thing, different strategy, also high minimum. And after I went to the third fund, it was the same situation. I thought, well, maybe there's a hedge fund of funds in the space, having invested in a traditional hedge fund of funds personally, and there wasn't. So I went to go chat with someone, you folks may know, a guy named Fred Wilson, who runs Union Square Ventures, who'd become a friend. And I said, Fred, I'm thinking of doing this in the space. And Fred had seeded a number of the better VC and crypto hedge funds in the space. And he said, I think it's a great idea. It's going to happen. You should run, not walk. And so I launched Blockchain Investment Group in February 2018. People thought I was crazy. A lot of people cautioned me against it. Why would you want to go into this space? At the time, the entire asset class was about a $450 billion asset class, still pretty nascent. And really the goal was to invest in the asset class. And the bet that I was making then, and I'm still making now, is that the asset class is going to grow into a real asset class. By real asset class, I think if you look at gold, which is a particularly small asset class at $11 trillion or so, all of crypto right now is still smaller than a large tech company. It's smaller than Microsoft or Apple. We've got $1.3 trillion in total crypto. So if one believes that the asset class is going to grow, I think, it's a really good time, as Tom alluded to be betting on this space. The question then becomes, how do you bet on an asset class? How do you hit some of the winners that Sean was talking to? And so when I started Blockchain Investment Group, the thought, which was just theory at the time, was, well, we'll allocate capital to the best and smartest people in the space, and we'll hope that they don't hit the same winners and trip over the same losers. And, hopefully it won't be duplicative, it'll be, accretive. And now that we have 4 years of empirical data, a little bit to my surprise, to be candid, but what we found is that smart folks in this space, with the benefit of asymmetric information and a lot of knowledge, are finding different winners, tripping over different losers. And there really is tremendous value in having this portfolio approach and being able to have the smartest people in the space place your bets. Traditionally, a second layer of fees, I know being a traditional finance guy, can loom pretty large. In the crypto world, the incremental fee difference is literally 1 day's volatility, and the benefit of being in with one more good asset manager or one more good project is orders of magnitude more important. So we don't want to over diversify. We don't spray and pray. What we do is we try to find the smartest people in the space through some pretty rigorous due diligence, and we just try to have the smartest people placing our bets. Another thing, a couple other points I would just like to make that are kind of interesting in hindsight now is when I started the fund, nobody mentioned the term DeFi or NFTs. These were not even concepts that existed. And now they're kind of common terminology. However, because of the broad charter of the funds that we're in, all of our LPs have benefited from these unknown unknowns at the time we launched. And I strongly believe as this asset class evolves that there are going to be tremendously more benefits of these unknown unknowns that we can't quite fathom today. But you can kind of see it happening when you've got digital assets that can be zipped around the planet via smart contracts an infinite number of times very quickly and pledged as collateral and used to generate yield and all kinds of other things, using software. The opportunity is really endless. And I think there's going to be tremendous opportunity and tremendous growth in this space. The other thing that I think is really relevant for this asset class as a whole is it's very different than other asset class we've seen in the past. If you look at US equities, for example, about 20% of the global population has access to buy US equities. This is the first time we've had an asset class that literally everyone on the planet, if they were in possession of a smartphone, could own and hold digital assets. And there was a note that came out from Sean and the crypto team at FundStrat today that kind of alluded to that a lot of the lower income folks in the United States in particular, and particularly banking the unbanked, folks are holding digital assets on their phone. They may not even have a bank account, but they're able to hold these things on their phone. And in the case of something like Bitcoin, if you can hold an asset that might help you keep pace with inflation, that's the kind of thing that really has massive global application between banking the unbanked and narrowing the wealth gap. So grand scheme of things, I think that crypto is an asset class that is going to grow massively over the short and medium term. If someone would have told me that the regulatory landscape and geopolitical landscape was going to evolve as positively as it has since we launched over the last 4 years, and crypto assets would still be, hovering in the $1 trillion range, I would not have believed it. The chairman of the SEC, Gary Gensler, taught a class at MIT on Bitcoin and blockchain. Janet Yellen was making positive comments in April about Satoshi's innovation. The president of the United States issued a memorandum, starting the first paragraph, and it said 40 million Americans, own crypto, and kind of instructing the government agencies to regulate this prudently. So I think as regulation comes in, it's going to be terrific for the asset class. We're going to see more institutional capital come in. And in a market where traditional equities are trading at very high P's, and it's hard to find comfort investing, in all other assets, especially when you factor in, rate of inflation, and that real estate and stocks, et cetera, are really US dollar derivatives where the benefit of those free cash flows is being inflated away. Crypto really starts to hold some unique value. And I think it's just a particularly exciting time in the space. Happy to take any questions or delve in deeper in any area that folks might have an interest.
Eric, that was a great overview. And I think we'd be remiss if we did not double click into BIG's performance to date. I'm going to go ahead and share my screen one more time. So a couple of things that stood out to me that I wanted to suss out from Eric's words just a moment ago. He had spoken to diversification and how it's kind of different within the crypto hedge fund investment ecosystem, and how he was surprised at how independently a lot of these crypto VCs operated and invested from each other. And I think this slide really speaks to that fact, right? So Multicoin, Block Tower, Pantera, these are three funds that Eric, you've invested in a lot of capital in. They've performed relatively well, and it sounds like you were surprised at how spread across the industry they were in terms of their portfolio holdings. Yeah,
I'll go one layer more of granularity here. So what we're seeing now is we're seeing a lot of traditional finance firms starting to move into the crypto space. And there's something really unique about the crypto space that's very different than the traditional finance world and traditional venture capital world that I come from. In the crypto space, the folks that hold all of the leverage and cards are the developers. And there's this ethos in crypto land, for lack of better terminology, where these developers have a general aversion to traditional finance folks. They don't want your traditional VC firms investing in our deals. They don't like them. Rational or irrational, they don't like them, right? So what you've got is you get some self-fulfilling prophecy on the native crypto guys. So some of the firms you're looking at, the names up there, and others that were invested in as well. What you really want to see is the perfect combination, which is very hard to get, which is some native crypto general partners paired with some traditional finance folks for some risk management capabilities, where you've got access to the deals, you've got credibility with the developers, and you can actually, kind of get into the better deals as opposed to being forced to take whatever comes across the transom and pay these higher valuations. And the firms that you see here, as well as some other ones, for example, by virtue of having been in the space a while and also being the individual responsible for bringing Michael Saylor into Bitcoin, which was, perceived as pretty positive for all of digital assets as well, I get a little bit of kind of favored nation status at a lot of funds and access to funds that may be closed or limited to capital. So there's another fund that's launching June 1st that we're going to allocate some capital to. It's a guy named Avi Feldman, who comes out of Block Tower, and he's being backed by a team from Golden Tree Asset Management. The name of the firm is going to be called Golden Chain. And they have limited the amount of capital they're going to take. And in addition to taking as much capital as we want to give them, as they said, they'll be willing to do forever, they're also going to give us a little break on the fees, which is super generous of them. So a little bit of it is about access, and there really is asymmetric information in this industry. And there's a big difference between flying blind and having people with a little bit of an edge place your bets.
Yeah, Eric, I think that's a really good point in terms of access. To your point, everyone has access to the top 10, perhaps 50 coins through some kind of fund, trust, what have you, that are offered by the Bitwises, the Grayscales of the world. This is a different kind of access. This is an access to the frontier of the industry that you have spent the better part of a decade building rapport in and a reputation in. And it is, while it is a growing industry, it's still kind of small in terms of the highly skilled players, and receiving access to you with that foot already in the door removes the need for investors to potential LPs to have to climb that steep hill, right?
Absolutely. I mean, in addition to that, it really is kind of an all-inclusive play on the asset class. Having been in and around the space for a long time, I get presented with an unbelievable number of personal opportunities to invest in XYZ project at whatever stage. I don't have a single personal investment in crypto outside of my fund, not for any solidarity or, any kind of ethical reason or conflict of interest, only because I genuinely believe we're with the smartest people in the space. And the same thing applies to me. Just because a deal gets shown to me by a group that I may respect, I don't have the purview that one of our fund managers has about everything that's going on in that particular space. If it's someone looking to do a social media kind of project or something, I haven't looked at the entire landscape of those projects. I haven't evaluated every team. So it's just, I just feel way more comfortable having our managers place all of my bets.
Yeah, Eric, I mean, in our annual overview, our outlook, I guess, 5 months ago at this point, we had discussed that we were anticipating, a shaky first half of this year due to the macro headwinds that we were experiencing. But we were clear in so far as we did not anticipate a crypto winter, which for those who have been in the industry for over 3 years understand what I mean when I say crypto winter. It means that there is no developer activity going on, at least comparatively speaking. Not a lot of interesting developments, investments, etc. But we are so far, although prices have taken a dive, we are so far beyond the days of experiencing long crypto winters, because there are all of these emerging areas within crypto that you, quite frankly, can't specialize in, and to a large degree have to outsource to specialized investors, right, Eric? For instance, if you want to invest in DeFi, oftentimes you need to find a DeFi specialist to invest in. NFTs, same deal. To that point, Eric, is that how sometimes you look at investing in certain managers based on specific verticals?
Not really. I think that within a firm, there will be individuals that might specialize in different verticals, kind of like Fundstrat, right? You guys have individuals that will focus on different segments of the crypto market. But the funds themselves, generally speaking, have broad charters so that we get to take advantage of this evolving asset class and kind of some of those unknowns that we spoke about before. And you kind of alluded to, some of the price fluctuation and the downturn here and the crypto winter. I mean, I would be lying if I said I didn't look at the prices on a daily basis, but it honestly doesn't cause me any anxiety, in the sense that I really think that, not to be nonchalant about it, but I think the outcome is a little bit of a foregone conclusion, in the sense that the world has decided they want these technologies. Not just the United States, literally the entire world has decided they want digital assets, they want DeFi, they want NFTs, they want metaverse type related gaming things. They want all of these assets. And if you think about the mind share that it takes from just a news cycle point of view, whether it's regulators, whether it's, financial news channels, whether it's entertainment news channels, it's just gaining so much attention from so many people. You know, I'm reminded of the phrase, there's nothing more powerful than an idea whose time has come. And I really feel like that's kind of crypto's place. And this is going to grow. I don't have a crystal ball, and I can't predict whether or not DeFi or NFTs or which particular aspect is going to lead the way or grow or be the next leg of growth. But the folks that we have the capital with, they are on the front lines with awesomely impressive people and teams who are talking to the founders of every major project in the space. They're influential in bringing the best developers to the projects that they support. There becomes a real degree of kind of self-fulfilling prophecy and asymmetric information where we're not just taking a shot in the dark and buying one of the 20,000 cryptos that are out there and hoping this one goes up. So I'm really confident that if the space grows, we will continue to perform hopefully better than the space, but minimally, in line with the space, which in a land where there's not much growth to be found right now, I think that crypto represents like just a massive beacon of light and opportunity.
Completely agree, Eric. And to your point of information asymmetry, sometimes people don't understand because it is this completely liquid asset class traded 24/7. A lot of people don't understand that there's a large difference between Bitcoin, Ethereum, and the rest of crypto. The rest of crypto is akin to liquid venture capital, right? And so similar to illiquid venture capital, there's a lot of info asymmetry that if you allocate capital to the right investors, they're going to be able to, for lack of a better word, exploit that info asymmetry on your behalf.
Absolutely. Absolutely. And it's even more than that. It's more than just information asymmetry. It's kind of like when I was at GE Capital, back when GE had a good reputation and we used to invest in a private equity deal, there was kind of this GE housekeeping, seal of approval where the company benefited from having GE equity as an investor. Now you get the same thing in the crypto space where some of these funds will allocate capital to a project and that project will attract developer talent, better investor talent, all kinds of other benefits because some of the funds we're in have allocated capital to it and kind of chosen it. So it really is very, very powerful, who's making your investments in this space as opposed to just kind of, taking a shot in the dark here. Even if you were to just pick, kind of the bigger names, for example, Ethereum. Ethereum's got a lot of inertia, a lot of momentum, a lot of good projects going on. But if you dig a layer deeper and you talk to some of the hedge fund managers that, we work with, they may have a substantial Ethereum position at the moment, but they have every sense that they'll likely be dialing that back and allocating it to something else as they see developer talent leave, other projects leave, things move to like Solana for various reasons, stuff like that. So they're really on the front lines.
Right. That's the stuff that you read about in Bloomberg 8 to 12 months later, right? They're
exactly right.
They're at the tip of the spear when it comes to that.
Exactly.
Eric, can you brief us on your performance? I mean, this is not your first fund you're raising capital for. I pulled up the slide. The returns to me speak for themselves. But if you would like to elaborate on your historical performance.
Sure. I launched at a really inopportune time. In February 2018, we were going into a crypto winter. And the funds that we were with did a pretty decent job of preserving capital and kind of performing with the market at a downtime and then generating a ton of alpha, when the bull markets came back. And I think that's what you hope to see. And so now we're in a situation where 2020 net of fees, we generated 316% return net. And 2021, it was 478% net of fees. I think this year's, we only have numbers through March. Reporting in crypto is a little delayed, as you can imagine. And through March, we're down about 22% year to date. So kind of performing in line with the market to this point. And, we'll see. To your earlier point, I think that the winters will be contracted. The building and development and all the capital that's gone into the space continues, even though price fluctuates or maybe is down. And now that we have so much institutional involvement, I think the seasonality of crypto will, be a little more contracted and not quite as prolonged. And, I think it's going to come back, strong. At what point? I think anybody that tells you they know which direction the next 20% in crypto is, should be taken with a grain of salt. It's unpredictable. That said, if you zoom out and look at the big picture, as Tom was alluding to in his opening remarks, I mean, nothing is performing as well as this asset class, and there's every reason to believe that the trajectory is going to continue or increase, actually.
Could not agree more. And a very simple concept in terms, when it comes to investing, that sometimes is hard to employ, right? Is buying low and selling high. So
yeah.
It's it sounds like I'm being trite, but it's really it's true, right? We are in the depths of a crypto bear market.
It's particularly challenging in crypto, Sean, because in traditional assets, you've got a stream of cash flows, and people can get comfort on a DCF or whatever valuation metric they're using in a stream of cash flows. And when price becomes unreasonably low, they can get comfort on some kind of cash flow multiple basis or valuation. And that's really not the case in crypto. So that's why I come back and looking at an asset class. And if you just frame things in the context of an asset class, even if you just compare it to gold, gold is dying. Gold is the same price in US dollars that it was a decade ago. There's been massive inflation over the last decade. By any metric, gold is not a store of value. So if you look at the path of crypto or Bitcoin over that time period and you zoom out, it's volatile. Yes, it's an emerging asset class. And so if you follow any traditional, technology adoption curve, there is that volatility. I mean, even Amazon, from the time it was a public company, lost 80% of its value 6 times as a publicly traded company. So I think what we're going to find in crypto is that, yes, it's going to continue to be volatile. But if you place your bets now at a time when the asset class is by any measure small, that as the asset class grows, if you have, if you've made good bets, we're gonna profit, some pretty staggering numbers.
Yeah, well, I couldn't agree more. Sometimes it just, I know a lot of our clients need to stay invested and look at things on a calendar year perspective, but if you just increase your time horizon for, a little more than 12 months, I think that helps out a lot when investing in this industry. Eric, can you brief us on your raising, obviously? Can you brief us on where you are with your raise and what the terms look like?
Yeah, sure. So the terms are there. Minimum investment, $500,000. We've got an 18-month lockup period. The only reason that we have a lockup period is to comply with the underlying funds in which we invest. I have no desire to lock up anybody's capital, and there's quarterly liquidity after that. There's also a 10% annual hurdle rate, and we charge a traditional 1 in 10 management fee. And in a given year, if net of the underlying funds fee structure, we're up 300% or more, it's a 1 in 15 structure. I think we use the best service providers in the space. You see Signature Bank down there, which we were the first crypto-related account that Signature Bank had, and it now accounts for more than 30% of their AUM, and that's an $80 billion bank. So you can just see that traditional finance folks are moving into it. And as you know, Sean, I've never actively really marketed the fund. I enjoy the picking the managers and getting into the nitty gritty of that. So Yeah, I haven't been super active on the raise, but I'll speak at some events and things like that, and just kind of word of mouth and speaking at different investment conferences is how we've raised capital.
Right. Yeah. And obviously, we'll announce this again when we sign off. But if you are interested in discussing a potential investment with Eric, feel free to reach out to us or to Eric, and certainly can answer any questions, chat further about it.
Sorry to interrupt. I should also add that we accept capital on by the first of every month, so monthly.
That is good to know, because there is a first coming up next week, I think.
There is.
Eric, you had noted in your signature bank comment, you had noted greater interests from traditional institutions in crypto. I'm just curious, have you seen any of that in your LP base? Any inbound inquiries about investing in fund of funds, or if not, do you have a general take?
Yeah, the pension funds and endowment funds are starting to come into the space. I think they still have a little bit of an aversion, to be candid, to a fund of funds. That said, most of the conversations are family offices, high net worth individuals who are really now, for the first time, over the past couple of years, it was kind of kicking the tires, wanting to get smart on the space. And now we're seeing like real capital allocation. I have to say, I think that institutional investors have gotten really lucky in some ways. It's just, for the amount of growth and progress that the digital asset space has made, especially on the regulatory front, to think that we'd still be, in aggregate, $1 trillion asset class. It's just amazing to me that the opportunity is still as great as it is.
Yeah. No, that makes sense. Speaking about, so I think one of our live attendees raised this point. Speaking about LP returns, from your perspective as the fund of funds, are you ever provided with fund returns in native crypto tokens?
Do we receive distributions from the underlying funds and tokens? No, we do not.
Okay. Because there was a follow-up question pertaining to how you would approach the situation, but it sounds like that is a non-issue.
No, coming from traditional finance, my goal was to make this asset class as accessible to traditional investors as possible. So we found the most traditional service providers we could. We delivered K1s at the end of the year, monthly statements from Sudrania, our fund administrator, and we just try to keep it. We want to give people the ability to invest in the asset class without having to go through the whole not your keys, not your coins, wiring money into companies that they've never heard of, like Coinbase or something like that, and having, eliminating those concerns for traditional investors.
Yeah, I think that makes the most sense. And it's a good question, right? Because to your point,
yeah.
I'm not sure that an LP in your fund should need to be dealing with those types of questions. So
I do have a small Bitcoin fund for high net worth individuals and family offices where we just buy and hold Bitcoin, and I charge a 1% fee. That's it. And in that particular fund, you come in US dollars, but when you want to leave that fund, you do have a choice to leave, go back to US dollars, or have Bitcoin sent to a wallet address in your possession. Because I do think in Bitcoin's case in particular, it's important to be able to have the bearer aspect of it. So in that one we do.
You and me both, Eric. Let's chat about Bitcoin real quick. I'm not sure if you actually mentioned it, but one of the, in my opinion, most interesting items on your resume is that you orange pilled Michael Saylor, who we had on one of our webinars, late last year. How did the conversation evolve there? Just out of curiosity.
Sure. Michael's been one of my closest friends for more than 20 years. And we often will discuss investing, in particular technology investing. And we spend an awful lot of time hanging out together. And I brought up the fund when I launched to him, and suffice to say, he cautioned me very strongly. Was I sure that I wanted to do this? I had such a good reputation in traditional finance that, this was new, and he might have used some stronger language and said only criminals use that crap or something like that. But, so I said, so you don't want to invest? So he did not want to invest in the fund. But then I kept bringing up Bitcoin over the years. And it was during the pandemic, during quarantine, we were spending a decent amount of time at his house in Miami. It's pretty comfortable accommodations when you couldn't go anywhere. And, he remembers me saying that anytime there's a paradigm shift like this, and we were talking about K-shaped recovery and the way the stock market was performing, which only Tom predicted, by the way, and kind of, trying to make sense of it all. I said, anytime there's a paradigm shift like this, there's opportunity. We just have to find it. And then, as I often do, I went back to talking about Bitcoin. And in the past, he had always, kind of brushed me off when I brought up Bitcoin. And this time he surprised me and said, tell me more about that. And so we spent the better part of a week every day just kind of talking about Bitcoin. I explained everything I possibly knew about Bitcoin to him. And then, he wanted some more resources. I pointed him to some more resources. And then I got him set up to buy it. And then one day I was in my car pulling into a restaurant, and the phone rang, and it was Michael. And he said, well, I bought some Bitcoin. And I said, okay. And at the time, Bitcoin was $10,000 per Bitcoin. And he said, yeah, 10,000. I said, you bought one Bitcoin? And he says, no, Eric, I bought 10,000 Bitcoin. So his first trade was $100 million. And I went from thinking, great, I got my buddy into Bitcoin, to, oh crap, because anybody who's been in it knows that it's not, a straight ride up. So, but he's been great for the space. And I think the best thing about him getting into the space is the podcast he's done, and kind of like putting his intellect and the way he thinks on display for so many people to see. And it was the right time for crypto to have someone who is a public company CEO with his credibility and his ability to articulate the way he did, kind of come to the space and give us some of the credibility that we needed.
Absolutely. Yeah, I completely agree. And I love to see what he's doing now in terms of using Bitcoin as a collateral in traditional debt markets. So yeah, to echo the your sentiments, he's been great. And to add to that, I guess thank you for your persuasive
Thanks, man.
skills. Because
thanks, Sean.
Great. Awesome. So I guess I feel like we've been looking at things through let's call it a rose-colored lens. Perhaps, is there anything on your mind when it comes to deploying capital over the next 12, 18 months that might keep you up at night? What are your biggest concerns? What are your biggest risks?
So the biggest concern in the crypto space is everything gets lumped together from a terminology point of view. The fact that we say crypto, right? And that includes, as you know, a whole host of very different things, some of which you alluded to before. We've got Bitcoin, which is a digital property, a very different asset than, say, an Ethereum or other smart contracts in this liquid venture capital world. And then in addition to that, we've got outright scams and fraudulent things, and things that are at best a joke and shouldn't be taken seriously. So I do think that the risk is not from the folks that we invest with, because they obviously know the difference to a great degree. Just the public perception. I dislike this one big brush that paints the entire space. And I think that as we start to get some regulatory clarity here, we're going to start to see, even within the asset class, we're going to see things separate very materially. I think that Bitcoin is going to hopefully get some different regulatory guide rails than some of the other stuff. Bitcoin, I think, will likely be viewed as property and not a security. Other things will likely fall into the security bucket. And hopefully the SEC and other government agencies will go after the outright frauds. But as far as from how we allocate capital and kind of manage risk, I do a lot of due diligence on the individuals to whom we're allocating capital. And I'm big on kind of ethical and moral kind of stuff. And are these good people? Do they have good track records? So we spend a lot of time making sure that I'm comfortable with the individuals, in addition to all their, kind of financial credibility and industry credibility. I've got to get really comfortable with that. So I continue to evaluate more firms than I can count. And we say no 99.999% of the time, just because it's not about trying to find more. It's about trying to find someone that has an edge, who's a good steward of capital as well.
Absolutely. You have, you've alluded to it a couple times, so perhaps I'd like to just double click on the regulatory and public acceptance point that you had raised. I think what's going to be interesting, we've already seen it in a lot of primary elections over the past couple of months, but I think what we're going to see come November is a lot of momentum put behind crypto, pro-crypto candidates for Congress and other elected positions. Just last week, we had 4 primary elections that featured candidates that were pro-crypto. And the reason is because US citizens have already made the decision with their wallets, with their digital
100%.
wallets, right? And so to that point, I think political headwinds that are perceived are, if they exist, they're going to be fleeting and become tailwinds very soon. And I just wanted to nail that point home because you've alluded to it a couple times, and I just wanted to co-sign that.
I agree with you completely. I think one of the biggest telltale comments was in the executive memorandum from Biden. The first paragraph started out by saying, and it's a low number, right? Because it's grown since then, but 40 million Americans own this. And you don't get reelected taking away something from people that they want.
Yeah, absolutely. So there is actually we're running low on time, but somebody asked a really good question from the audience as it pertains to all of the capital that has come into the industry at the early stage. I have my answer to this, but I'm curious, do you think that right now there is too much capital, which has been free for the past decade, what have you?
Yeah.
Too much chasing too few good projects?
It's a good question. The short answer would be no. It impacts valuation, but I think the more important piece is that even though prices may fluctuate and we may be in this winter, that capital has and is being deployed, and there are billions and billions of dollars that has flooded into the space, and actual building is happening, and real development of projects is happening. And I think that's the important thing here, is that the building continues, the industry continues to grow. It's attracting incredible talent from every area. It's really amazing. Especially if you look at traditional finance and some of the folks who've come over into this space, it's super impressive people who are making the transition. And I think that money helps them make the transition as well. So I think it's constructive. Might there be a little bubbly kind of thing in venture deals in the short term, and maybe some of the airs coming out of that? Yeah, but in the grand scheme of things, with $1 trillion asset class, I think we've got a lot of room to absorb a lot of capital.
Yeah, in short, I agree, Eric, and understand why that question was raised. But I think you really need to understand how much still needs to be built. I mean, think about how big internet, the web 2.0 is, and think about how much further web 3.0 needs to go to obtain that level of adoption. There's just still so much runway and so much left to build. So not a grave concern by any investor in the industry right now.
One microcosm of that, just to kind of, make it more of a reality, is if you look at metaverse, the funds in which we're investing are not investing in metaverse projects, right? Someone comes to them and says, hey, we've got this new metaverse that we're building and, we're going to sell land in it. That's not the kind of deals they're doing. It's still too early. There's still too much building that has to take place. They're investing in the enabling technologies of the metaverse, the rendering technologies to render the NFTs and display them and things of that nature. So in that area, they're kind of doing more picks and shovel investing. So it just gives you an idea that there really does need to be like building to take place before we get there.
100%.
Hey,
100%.
Eric, I have a question before you go. Sorry, Sean.
Sure, John.
No worries.
Do you have capacity with every fund you've invested in right now?
Yes.
So if somebody gave you $200 million, you could replicate your current portfolio without a problem?
Without a problem.
Okay. Thank you.
Which is meaningful because one of the funds that we're allocating capital to has cut everybody who wants to give them capital in half. So it's nice that we can give them as much as we like.
Thank you. Thanks, Sean.
Love it, John. Right to the point.
Yeah.
Eric, with that, I think we got the red light. We probably need to sign off. Save the rest of everyone else's Monday. But I think this has been great, and I hope everyone's learned a lot. I don't know if you have any parting words. Where can people reach you if they're interested in learning more?
The best is email Eric at BIG, acronym for Blockchain Investment Group .fund, or on Twitter, Eric _ Eric. What is my Eric? BIG _ FUND, I think. I don't know. But yeah, just email is best. Eric at BIG.fund.
Phenomenal.
Thanks so much for taking the time. I appreciate it.
Thanks so much.